You know, real estate's fascinating, but man, things change so quickly.
Oh, tell me about it.
One minute the market's booming, the next you're bracing for a downturn. And as a homeowner, that can be pretty unnerving, especially when foreclosure becomes a real possibility.
Right, that fear is unfortunately very real for a lot of people.
But imagine if there was a way to navigate those rough patches, a kind of safety net for when those mortgage payments become a struggle.
Well, a safety net would be amazing.
Well, that's what we're diving into today.
Okay, sounds good.
Straight from the Federal Housing Administration, we've got this FHA INFO 2024-03 document, and it's all about a brand new program, the Payment Supplement.
Payment supplement, huh?
Yeah, and what really caught my eye is it's designed to be a lifeline for homeowners, but it's not a loan modification.
Interesting.
It's a whole new approach. So tell me, what's the deal with this payment supplement?
Well, it's definitely a unique approach, that's for sure. It's specifically designed to help homeowners who are facing that risk of foreclosure. And it does that by temporarily reducing their monthly mortgage payments.
Okay, so it's kind of like hitting the pause button on those huge payments.
Exactly.
Yeah.
And like you said, it's not a loan modification. That's a key difference here. And the reason that's so important is it doesn't add to a homeowner's existing debt burden.
Right, they're already struggling.
Right. It acts more like a bridge, just to kind of help them get back on solid financial ground.
That's a really good way to put it, a bridge. So it's addressing the core issue, not just slapping a Band-Aid on it. But how does it actually work? Is it like a grant? Does the homeowner just get the money?
Not exactly. It's more like the FHA is advancing funds to the mortgage servicer on the homeowner's behalf
Okay.
to cover a portion of those monthly payments for a specific period of time.
Hmm.
And this takes some of that immediate pressure off the homeowner, gives them a chance to breathe. But, and this is a big but, it's not just forgiven, okay? The amount that's advanced, it has to be repaid later on. But it's only repaid when the house is sold or refinanced or if the mortgage is paid off in some other way.
So it's not free money, it's like a deferred payment.
You got it.
But wouldn't that make it harder to sell the house down the line, having to pay that back?
Yeah, I can see why you'd think that. It's a valid concern. But the way it's structured, the repayment is tied to events that usually mean the homeowner's financial situation has changed.
Yeah.
Like if they're selling or refinancing. So it's kind of designed to align the repayment with moments when, hopefully, the homeowner's in a better place financially. You know what I mean?
Yeah, that makes sense. Okay, so this could be a huge help to a lot of people, but how do you even qualify for this program? Are there income requirements or certain criteria you have to meet?
That's a great question. And to be completely honest, the document doesn't actually lay out specific eligibility criteria.
Oh.
But, I mean, if you look at what the program's trying to do, it's pretty safe to assume that it's going to target homeowners who are facing real financial hardship and are actually at risk of foreclosure.
Right.
I think it's a pretty safe bet that those are going to be the major factors that the services are going to be looking at.
Makes sense. So it's not just like a free pass for anyone. You have to actually show a need. So let's say you do qualify. When can you actually access this program? Is it like available now?
So from what the document says, mortgage servicers, they can actually start implementing the program as early as May 1, 2024, but they absolutely have to offer it by January 1, 2025.
Gotcha. So next year, this is going to be like a standard option for anyone facing foreclosure on their FHA loan. That's a
Oh.
pretty big change in how we, deal with foreclosure,
Yeah.
right?
Oh, absolutely. It could be a complete shift. It's like they're finally recognizing that sometimes homeowners just need a little temporary help to get back on their feet.
Yeah.
It's about finding solutions that work for both the homeowner and keep the housing market stable overall.
Yeah, exactly. It's not about bailing people out. It's about helping them, like you said, get through a tough time and keep their homes. We've talked a lot about the overall idea, but this document also mentions some of the legal stuff like this payment supplement agreement rider and all that. Seems like there's more to unpack here.
Yeah, definitely. There are definitely some legal and administrative details we need to dig into to really understand how this is going to work in practice. I think it's important to understand all those little nuances in the documents and how they affect homeowners.
Absolutely, because at the end of the day, it's about making sure homeowners know what they're signing up for and what protections are in place for them. So let's break down those details next time. We'll take a good look at those legal documents and what they mean for everyone. Okay, so we know this payment supplement could be a really big help for homeowners who are struggling. But like with any financial agreement, there's always paperwork, right?
Oh, yeah, for sure.
And this document mentions, like, a payment supplement agreement writer, a promissory note, even a security instrument. I gotta say, those terms sound kind of intimidating.
I get it. Legal jargon can be a little scary.
Yeah.
But they're actually there to make sure everything is clear and to protect both the homeowner and the FHA.
Okay, that makes sense. So let's take these one by one. What exactly is this payment supplement agreement rider? Why is it so important for homeowners to really get that?
Okay, so think of the rider like an extra chapter added onto the original mortgage agreement. It spells out all the details of the payment supplement, like the exact amount, how long the assistance lasts, and what happens when it's time to repay.
So it's like adding to their homeownership story, this new chapter with a new agreement.
Exactly. It's basically a contract between the homeowner and the mortgage servicer, making sure everyone's on the same page.
That makes sense. But what about the promissory note and the security instrument? Those sound pretty serious.
Yeah, they sound serious, but they have important jobs. The promissory note is basically just a fancy way of saying the homeowner is officially promising to pay back the money the FHA advanced.
Okay.
It's a pretty standard document for a lot of money stuff, just making that commitment official.
And the security instrument, is that about the property itself?
Bingo. The security instrument gives the FHA a legal claim to the house if the homeowner can't repay the agreement.
Oh, okay.
It's a way to, like, manage their risk and protect the money they invested, kind of like how a regular mortgage works.
So it's a safety net for the FHA? Okay, so if things go south, they have some options. But what about the homeowner? Are they protected in all this paperwork?
Oh, yeah, definitely. Remember, the goal is to protect both sides. And the FHA really wants to make sure homeowners get it, like that they really understand all the terms and conditions before they sign anything.
Okay, good. That's good to hear. Now, this document also talks about an annual payment supplement disclosure. Is that just a yearly statement that reminds the homeowner how much they owe?
It's a little more than just a reminder. It's a whole overview of where they stand with their payment supplement.
Oh, okay.
It includes stuff like the balance, any interest that's added, and like an estimate of what they'd have to pay back if they sold or refinanced the house at that point.
So it's like a yearly checkup on the agreement, keeping them in the loop.
Yeah, exactly.
Yeah.
It helps homeowners stay informed so they can plan.
Good. That's good. So as we're talking about all this, it makes me think about, the bigger picture. What could a program like this do to the whole housing market?
It's the million-dollar question, right?
Right.
A program like this, it could definitely have a big impact on the housing market, no doubt. I mean, some people might say it could push home prices up or even lead to, riskier lending.
I can see that. Like with any big policy change, there's always that chance of unintended stuff happening.
For sure. That's why it's super important for the FHA to keep a close eye on this program. Watch the data and be ready to tweak things as they go. It's about finding that sweet spot between helping homeowners and keeping the whole housing market healthy in the long run.
It's like walking a tightrope. But wouldn't stopping a ton of foreclosures actually be a good thing for the market?
Oh, absolutely. When homes go into foreclosure, it really hurts neighborhoods and drags down property values. So by helping homeowners stay in their homes, this program could actually make the housing market stronger and more stable, finding solutions that work for homeowners and the whole community.
Yeah, I like that. It seems like there's a lot of potential good here, but also some real concerns to keep in mind. This is complicated.
Absolutely. There are a lot of moving pieces.
So what's your takeaway from all this? What should homeowners and, people thinking about buying a house, what should they know?
I think the bottom line is this payment supplement could be a huge game changer for homeowners who are in a tough spot financially. It's a big step towards, preventing foreclosure in a way that actually helps people.
I agree. And for anyone wondering, is this just for FHA loans, or are there similar programs for people with regular mortgages?
Really good question, and that's something we should definitely look into.
Yeah.
You know what? There are actually other options for homeowners with conventional mortgages.
Right.
And that's actually what we'll be getting into in our next segment.
Perfect. So stay with us, folks. We'll dive into those other programs and resources next. We've been talking a lot about this new FHA payment supplement.
Yeah.
And it seems like it could really make a difference for people having a tough time paying their mortgage.
It could.
But what about folks who don't have FHA loans? Is there anything out there to help them?
Oh, absolutely. There are actually quite a few resources and programs for people with conventional mortgages who might be in a similar situation.
Okay, so let's get into those. What are some of the key options that homeowners should know about?
Well, one of the most important resources is the homeowner's own lender.
Oh,
A
wow.
lot of lenders have hardship programs or forbearance options,
Mm-hmm.
and those can provide some temporary relief for anyone who's, having financial trouble.
Okay.
These programs, they might involve things like reducing the payments, maybe deferring them for a bit, or even modifying the loan terms.
So the first step is to reach out to your lender and see what they can do.
That's right.
Don't just keep quiet about it. Talk to them.
Absolutely. Communication is key.
Right.
And then, besides individual lenders, there are also some government-sponsored programs that can help.
Oh, interesting.
Like, for example, there's the Home Affordable Modification Program,
Oh, yeah. APE.
HAMP, yeah. And that's specifically designed to help homeowners avoid foreclosure by changing the terms of their mortgages.
I see.
So that could mean things like lowering the interest rate, stretching out the loan term, maybe even reducing the principal balance.
HIP has helped a lot of people.
It has.
It's really good that those safety nets are out there.
Yeah. And then, there are also nonprofit organizations and housing counseling agencies.
Okay.
They can provide guidance and support for homeowners struggling with their mortgages.
I see.
They can help homeowners understand what options they have, negotiate with lenders, and, help them find and use all the resources that are available.
Wow, so many options.
Yeah.
It's really important to stay informed and take action, isn't it?
Oh, absolutely.
Mm-hmm.
Knowing what's out there is huge when you're dealing with these kinds of tough situations.
Right. The more you know, the better choices you can make.
For sure.
So for our listeners who might be feeling lost or unsure where to start, what's the best advice you can give them?
I would say, first of all, don't panic and don't give up. Reach out for help. Start by talking to your lender. Check out those government programs and connect with a housing counseling agency.
Okay.
There are resources out there and people who genuinely want to help you find solutions.
That's so important to remember, you're not alone in this.
Right.
Lots of other people have been through similar things and come out okay on the other side.
Absolutely. It's about being resilient, taking action, and using those support systems that are there for you.
This has been a really great deep dive into homeowner assistance programs.
Yeah.
We've learned about the FHA's new payment supplement
Mhm.
and all the different options out there for folks with conventional mortgages.
It's been great talking about all this.
Yeah.
Hopefully it gives homeowners the information they need to make the best decisions for their situation.
And for anyone who wants to learn more about specific resources, we'll have all the links in the show notes.
Yeah, definitely check those out.
We want to make sure everyone has the tools they need to navigate all this.
That's right.
Well, folks, that wraps up our deep dive into homeowner assistance programs.
Okay.
Remember, knowledge is power and help is out there.
Don't forget that.
Stay informed, be proactive, and like always, stay curious.
Thanks for listening, everyone.
We'll see you on the next Dip Dive.